Number 3. Some account balances for Good Boys Consulting Services are listed below. All balances are as of August 31st, 2017. In the space provided on the answer sheet, prepare a balance sheet as of August 31st, 2017. You might not use all the listed information. So there's 2 things that I would do first before I start to actually write out the balance sheet. I would go through and note what type of account everything is, and then I would also scratch out the ones that you don't need for a balance sheet. All right, so accounts payable, that is a liability. Supplies expense goes on the income statement, so you don't need that one. Accounts receivable is an asset. Notes payable is a liability. Retained earnings goes in equity. Salary expense goes on the income statement, so we don't need that. Supplies are an asset. Common stock is an element of equity. Cash is an asset, and land is an asset. All right, so remember you start off with the heading. So we have Good Guys Consulting Services. I abbreviated that, sorry. And balance sheet. And then for the balance sheet, the date line is just the date, because tomorrow it could all change. So it's only good for today. All right, so we're going to do assets on the left. All right, and remember they need to go in order. So cash is the most liquid, so it's going to go first, followed by accounts receivable, then supplies, and then the land. Okay, so we have cash of 8, accounts receivable of 15, supplies of 6, and land of 55. So our total assets are $84,000. All right, now on the right, we're going to have our liabilities and equity. All right, so our liabilities are account payable and note payable. And I'm going to line these up a little different because I want the totals to be out to the side by themselves. So I'm going to put these on the inside column. So $4,000 for account payable and $10,000 for note. Make sure you subtotal them and note that it's total liabilities. And notice I put that total to the far outside. All right, then we have equity. All right, equity is your common stock. I'm going to do the same thing. I'm going to put it on the inside. So common stock of 50, retained earnings of 20. So I have 70 for my total equity. Then add these 2 up, liabilities plus equity. And there's my total liabilities and equity. And thankfully they equal each other, and that's what we want to happen. It's the balance sheet.